Hey everyone, welcome to the Bybit TradFi $10,000 portfolio battle, where two traders go head to head to prove one thing: who builds the better portfolio, crypto or TradFi? I'm Shadi and I'll be your host for today's battle. And this isn't just another live stream, it's a war of markets. And the rules are simple. Each trader has got one mission: build the strongest portfolio using Bybit's powerful app. No fiat, no switching platforms, no hassle. With one wallet, you can now trade crypto, stocks, commodities, indices, and Forex, all in one place, all in USDT. So let's introduce our guest for today. We have FT, who is a product specialist here at Bybit. FT, can you give a little bit of an introduction? I guess we'll introduce our KOLs first. Now let's meet our portfolio wallet warriors. I guess first up we've got Mariano. Mariano, are you here?
Yeah, how are you?
Very good. Can you give us a bit of background about who you are?
Yep, I started in crypto around 5 years ago, and particularly specializing in the area of bot trading. But in the past years, I did a full transition into manual trading, what I call data-driven trading. So it's a little bit more of swing trading, more than portfolio balancing. But this is a very cool opportunity. Happy to be here.
Fantastic. Good to have you here. And on the other side, we have Morton.
Hey guys, nice to be here.
Hello, Morton. How's it going?
Oh, good. Bit late here or early, whatever you want.
Fantastic. Can you tell the users a bit about yourself?
Sure. I started with crypto in 2013 and bought Bitcoin at $44. Went full-time Web3 in 2017. Started the website Airdrop Alert, which was the first site for airdrop farming. So I mostly focus on farming, a lot of like hedging strategies and neutral strategies. But trading is a big part of my day, like Bitcoin and Trump, follow everything all day to trade.
Yeah, of course. Fantastic. It's good to have you here. And next up, we have FT, who is our TradFi product specialist. FT, can you give a bit of background about yourself?
Hi, Shady. Hello everyone. This is FT. I'm a product manager for TradFi business. I'm working with Derek in this product line. I'm very excited to be here today. Introduce the Bybit TradFi experience on app. Thank you.
Okay,
Thank you for having me.
fantastic. It's good to have you here, FT. So before we dive into the portfolio face-off, here's your chance to win some trading power. We have 1,000 USDT in total prize pool. We have 500 USDT trade to win red package, which will be live on your screens throughout the live stream. So to claim these, you have to trade $100 in the next 7 days once you click claim on the red packet. 200 users will be eligible it's for all users, not only new users. And then 50 new users, red packet will be live a little bit later in the live stream. And you also have to sign up and deposit 100 USDT to claim. Now we have an extra 500 USDT voting reward. Now this is for your vote on who has the better portfolio, Mariano or Morton. So those who vote for the winner will split 500 USDT. So don't just watch, vote and win. Let's get into it. So first of all, we're going to take you a little bit deeper into the Bybit TradFi. And we have FT who's going to take us through the platform and tell us everything we need to know. FT, take it away.
Right. Thank you, Shady. Yes, here are some Bybit TradFi highlights. So number one, all-in-one trading platform. So users can trade all crypto and TradFi products like gold, Forex, commodities, indexes, stocks within a single app. There's no need to switch between different platforms. And number two is lightning fast account activation. So registration is incredibly easy by just one click. So you are ready to trade. So number three, flexible transfer, no off-ramping hassles. You can instantly transfer USDT from your wallet to TradFi account. So very easy. And number four, world-class trading infrastructure. we deliver millisecond level execution with institution-grade performance. Number 5, transparent fees. We offer tight spread, clear pricing, and no hidden fees. And last but not least, number 6, copy trading for TradFi assets. So you can follow top performing traders and start participating in these global markets.
Fantastic. FT, can you go to the trading page so we can actually take a look at the page? The most users will be able. So we go to trade, right? In the middle.
That's right. That's right. I'll show you this. Okay, so actually there are 2 easy ways to access the TradFi homepage in the app. So the first one is you go through the homepage, the shortcut, like the icon section. So you'll see from my screen here. So first tap the home tab at the bottom left on the main Bybit homepage. So near the middle top section, you will see a TradFi short icon here, the second one on the left. If you don't see it, that's okay. Just press the more button, so it will be in there. And the second way is via the trade tab. So as you said, at the bottom there, it says trade next to the markets. So at the bottom navigate bar, so just switch to TradFi and click on it. So you will just jump into the homepage of TradFi. So this will directly lead you to the homepage, like right here. So what you do here is, if it's your first time here, you will be led into a registration page, just like a one-step registration process. All you need to do is accept the CFD user agreement, which CFD stands for Contract for Difference. And once your TradFi account is created, you will see my current screen. And what you need to do is you need to transfer a little bit of fund into your account. Just click the transfer button at the top right corner of the screen, like this one. So you can transfer your fund from funding or utility account into your TradFi account. So by transfer some account in, just confirm it. Oh, that's it. So you got your fund in. And once that, you just go down there. You see this is the market. That's all the product and symbols listed here. So click on the ones that you want to trade. For example, say gold. So XAU USD. And at the bottom there, you'll see 2 buttons. The green one is buy and the red one is sell. So just click on any of it and put into the, let's say, what the reporting one lot. Or you can see by USDT, right? It's up on you. Once you decide it, just click on it. And you can see all the positions will just beneath your like a candlestick chart. It's right here. These are the available current positions. So we designed this flow to make sure you can find, active, fund, and trade TradFi products as smoothly as possible. And thank you. I hope you enjoy the experience.
Cool. Okay.
I have one question about that. Can I ask it?
Yeah, go for it. Go for it.
Yes, please.
So for example, if I buy the Apple stock through the Bybit app, do I actually own the stock, or do I own a token that points to the stock, or it's an IOU, or what is it?
Right. Oh, that's a good question. Actually, the answer is no. You don't really own the underlying stocks. It's more like the perpetual contracts. So for CFD, we call it contract for difference. You're literally buying or I would say speculating on the price. So when you get the interprice and the entry price, and when you close the order is the close price. So your profit and loss will depend on these 2 prices. You don't like you buying sports. You don't really owning the stocks or owning anything. So you are just speculating on this. All you have is this position here, but it's real. Yeah.
Yeah. Okay. Got you. Honest.
Yeah.
Okay. Fantastic. I guess we can move on to the part where we get both of you, Mariano and Morton, to kind of walk us through your 10K portfolio. Of course, this is just speculating on what you believe is the top picks for now, your strategic positioning, your rationale. Explain the allocation. Maybe we could start with Mariano.
Yeah, let's go for it. Can I share my screen?
Yeah, please.
Perfect. So I'm looking for a more like a medium-term portfolio in here. And the way I'm diversifying is by trying to allocate to different asset classes. In this case, I'm trying to cover a little bit of equities, indices, metals, commodities. You can see some energy as well there. And in order also to carry some yield, I'm exposing as well to Forex. And I noticed that there is coverage of all the different asset classes in the Bybit app, so that's pretty cool. In this case, let me explain the top ones. For the top ones, I'm going a little bit with growth. I'm being a bit more aggressive with actual selection of equities. I appreciate that some of these are a little bit overbought at the moment, but since I'm kind of having an idea of going for medium term, I guess in between the different asset classes, they are going to balance out the risk. So, for example, I'm going for Apple, Tesla, Airbnb, Coinbase, and MicroStrategy, and some of them are actually very overextended. In terms of metals as well, we have gold, silver. Well, gold is just making some all-time highs at 3.5K, so that's another one that is very overextended. We got a combination of some assets that are overextended, but we are kind of betting on the future performance, potential future performance of the actual portfolio. So if some of them take a dip, we have the other ones to kind of balance out and smooth out the experience of the overall portfolio. We have some indices, and in this case, we have exposure to the S&P with the 500 stocks included, and the Nasdaq and the Euro 50. And that is kind of capturing a little bit of all of those markets. And on metals, I included, in this case, silver. And in terms of commodities, I've got natural gas, gas oil, and copper. And I picked three different Forex pairs. In this case, I got the JPY, Euro, and GBP from UK, and some cash on the side. It's not a lot of cash at the moment. Let me explain the allocation. So in the allocation, I went heavier on the equities. This is giving a little bit more preference to growth. Of course, if you want to get less exposure to some of them that are overextended, you can reduce that. But I went a bit aggressive in here with 30%, and then splitting in equal chunks of 6%, since I'm assuming the portfolio is 10K, therefore it's 600 for each. And then we got on the indices at 20%, that's 666 each, so equally split. And on metals, 10% and 10% on gold and silver, 8% on natural gas and copper, and 3% on the Forex. As I explained, the Forex is just to reduce a little bit the volatility. So that's pretty much the portfolio I'm coming up today. I actually check that all these assets are available on Bybit, and there's still some room for improvement, though. I could have done a little bit more analysis on the on correlation of the assets with each other to not get so much exposure. Of course, with the big tech in here, we tend to see that Apple, Tesla, MicroStrategy tend to go together, and then they dump together too. So maybe we can diversify to some other stocks, but just to keep it very simple and targeting growth and medium term, we can leave it like this.
Perfect. So what's your kind of logic with this kind of allocation? And you've kind of leaned into more commodities, and what was the top one? The stocks. You actually leaned into more of the stocks rather than commodities.
Well, as I explained, the intention is to try to catch the growth of this big tech that have been rallying for quite a long time. I still think that in 2025 we can get a bit more upside. This is a portfolio that a little bit reflects what I will do, because I'm catching in the recent days that we are about to do a breakout on the weekly on S&P and Nasdaq together. So if that plays out, we could see a bit more of upside in here. There might be some money printing incoming. As well, we have the global liquidity making all-time highs. So we could kind of benefit from that. We could see some rate cuts incoming as well. All of that, I would like to expose it to some growth, although I have to admit that that eventually needs to hit a top, in which case I will definitely end up reducing on that additional risk that we're getting from this exposure to these equities and the Nasdaq, and then give it back, those winners back into the other ones, to try to hedge against the risk of entering into a bear market as we enter into 2026.
And if you had to pick, let's say you picked one of the assets that you selected in your list, what would make you sell one of these immediately? What type of reaction that you see in the market would make you sell one of these assets?
Well, with AI, and I will say quantum computing, if there was a breakthrough on quantum computing, I would probably sell everything for gold, something like that, like a real. But I guess at that point we are all a little bit in trouble. But let's be a bit less dramatic, because quantum computing might take a little bit longer. But in a closer scope, we could talk about AI, the kind of industrial revolution kind of situation that could bring, that is already bringing, that is definitely gonna impact the performance of many of the assets, and there's going to be probably a little bit more of upside on Nvidia and stocks that are related, that benefit from that, but definitely we could be seeing eventually some sort of bubble, because at the moment everybody is so invested in AI and assuming that it's just gonna run forever. So at some point that's gonna pop, just like we had the .com bubble, that eventually everybody was like, oh, internet is gonna just give returns forever, and eventually it popped, and Amazon kind of came out as the one that survived that, but so many of them went completely bankrupt. So I think in AI, eventually we're going to see an effect like that. I've been looking at Nvidia when we had this recent crash, and I thought that was going to be the pop, but now we are potentially bringing in new highs on Nvidia, so it might carry on a little bit longer.
Perfect. That's a great explanation and background about the current state of things. Great. So I guess let's jump into Morton's portfolio. We would like to see what he's competing against. Morton, are you ready to present?
Sure. I don't have a nice spreadsheet like Mariano. I will just dive into charts so you can share my screen.
Okay, perfect.
First, I want to say Mariano has a very nice balanced portfolio, ready for multiple situations, basically. That's not how I trade or invest. I'm more on the fly, swing trading, and therefore I also want to be more focused. I don't want to have. I remember back in the 2017 days in crypto, I would have like 50 altcoins, and there's no way you can track everything. Coins will dump. You don't know why. You're behind on the information, kind of. So when I'm trading now, I focus on 4 coins maximum. And so with the stock portfolio, I kind of took the same approach, and I picked 5 stocks that I would hold medium term, meaning anywhere from 3 months to 1 year. Since it's only a 10K portfolio, it didn't make too much sense for me to divide that pie in different percentages. So they will all just be 20% each, 5 stock, 20% each. And let's dive into them. The first one I would like to look at is Starbucks. Like Starbucks is not the best quality coffee, but I like the the business by itself, it's a very easy coffee. Like when I'm traveling, I usually go. When I'm home, obviously I know the best coffee place in the area. I never go to Starbucks when I'm traveling. Starbucks is my go-to, and I know it pretty well. Let me open the weekly charts. Okay. So yeah, on the weekly, it's making higher lows. You see a low here in 2022. I think if I zoom out a little bit more, it's making higher lows since 2018. But yeah, let's keep the timeline a little bit shorter. It's making higher lows since 2018. Higher low, higher low, higher low. It's not making lower highs. Here you can see the high is higher than this one, but we're not at all-time high. All-time high was mid of 2019. It was at $125. We've been going sideways, consolidating for since it's here 2021. We've been going sideways for 3 years now. Here was the war dump here, strong reaction. It's above a lot of the EMAs, the weekly EMAs, the daily EMAs. It's here at a critical point, which is kind of like support-ish. So I would go here for Starbucks, just a 20% entry with a target of 106 to 125, which is the previous all-time high. That would be my first pick. Let's go to the second one is Amazon. Let's go to the weekly again. Amazon is also here testing support of weekly EMAs. The all-time high was 235 around Trump inauguration. It shot up with it when Trump, like crypto, when it looked like Trump was going to win, Amazon shot up. It's trending up for a decade. Like, it's a monster stock, really. It's a strong company, great fundamentals, multiple revenue streams. It's not only the e-commerce, like the marketplace, it's cloud computing. They do satellites, self-driving cars. They're very deep into robotics now. I think this company is going nowhere. With a decade-long uptrend, I'll put a bet over there. I'll just entry now and no price target. I'll just hold this forever, basically. The next one, number 3, is Uber. Kind of similar to Amazon. It has like an up-only trend for a long time, since 2022 here. It had a dip here, and I think this was a COVID dip. Shot up after. Higher lows since last summer. It's making higher lows, meaning it's a strong uptrend. It's trading above weekly EMAs. It retested here. So here you have like an all-time high of last year. We broke down, broke the all-time high again, and now it's like in retesting it as support kind of level. I would say you could enter now. You could also wait for like the EMA test of around 80.5. But with stocks, I wouldn't like be that nitpicky, and especially if it's like it's not a scalp where I want to be out on the same day or the next day. So every cent matters. It's going to be a medium to long-term hold, so I don't have to be too perfect on the entry. One revolution you're seeing right now is the self-driving robot taxis. Like I think Tesla did one in a pilot in Texas right now with like ultra cheap robot taxis. There's a little bit of fear that Tesla will grab big market share. Maybe they can, but I don't think this market of robot taxis is going to be a winner takes all. It's a big revolution. It's going to be an insane big market. I think Uber will grab a big market share. And I also think they can scale a lot quicker than Tesla can. Uber has a lot of partnerships. Tesla can only produce X amount of cars per year. Uber can connect any self-driving car to their network. So I think they will scale a lot quicker. and that this taxi robot cars will bring a lot of value to the company. Also, historically, the PE ratio is around 14. It's not too bad actually for a stock like this, which have been trending up for a few years now. I think that can stretch to like 30 or something, the PE. So I think it's like a fair price here to get in. And Uber as well. It's not only taxis. You have Uber Eats. It's a huge market. Like I use Uber Eats like every day. And not only me, it's I think in like 60 countries or something. So if it's in 60 countries, there's still like 140 countries left to scale to. But yeah, it's not only taxis, cars. They have more markets. I like this stock a lot. I would just enter now. My yearly target will be 125. Let's jump to the next one. It's maybe a little bit lesser known. Maple Bear, also called ticker card. This is an online grocery shopping giant. I think that market, their market share in the online shopping is, I looked it up, it was like 10 or 13%, and I think that would double pretty easily. Card hit an RS rating of 84, and that means it outperformed 80% of the stocks over the last year, and it's a pretty classic indicator for strong stocks, strong movers. Here you can see like it's not the cleanest one, but I drew like sort of a copper handle, which is a very bullish pattern, like a rounding bottom, a retest. We broke out of it, and now we're kind of retesting near the neckline. So I like that on the chart as well. That being said, this is one of the stocks I would buy. Again, I'm just looking to buy stocks to hold, so I don't have to get the perfect entry. Like I guess you could argue, wait for the 41.5 level to go in, but for 20% of a 10K portfolio, I don't need to get the bottom out of the glass, or I don't know if that translates, but that would be a saying in the Netherlands.
Nice.
But not always, all sayings don't always translate perfectly. Then the last one would be Eaton. This is also not a very well-known stock. I don't know why TradingView doesn't have that much historical data, but it's a global power management company. It provides energy-efficient solutions, hydraulic, mechanical systems, the whole scoop. The daily EMA here, like you keep seeing, like keep touching it and bouncing off it. It's doing. It's a good support here. It's on a 4-hourly as well. Currently, it's kind of like in the mid-range. It's been ranging here. I think this one you could wait till we test the EMA again, since it keeps testing it. This one is one like I'm not super familiar with. I would put a stop loss on this one. The other ones, I don't put a stop loss. Like I know those companies pretty well. I think they will do well this year, if not 2 years. Like it's not one I need to cut for a loss. This one I don't know that well. I will put a stop loss on this one. Round. Let me see. I wrote it down. Stop loss at 320. Oh, that's yeah. If we lose the EMA, basically 325. If we lose it, I would cut. But I think if we break the 338, it can go to like 400 in a blink. The company's fundamentals are pretty solid. Cash generative industry, infrastructure, data centers. Like this is my most gambly stock of the 5, I would say. So if you're not too comfortable with that, stick with the 4 and do like 25% each. But it's always fun to have one gambly horse to bet on in a portfolio.
And that's your piece of advice for today.
Yeah, like I come from crypto right here. I need to feel something.
Yeah, of course. So if you had to go all in on one asset today, which one would it be and why?
It would be Uber or Amazon. Like both of them are into the self-driving cars.
Yeah.
And if you do Amazon, you have a little bit more wide exposure because they're also very deep into robotics. So that being said, if it's one only, I would pick Amazon. I think Uber on the short term has a little bit more upside potential. But if it's a pick one to hold, it will be Amazon. Yeah.
Nice. And if you had to pick one asset, like to sell, like what would make you sell it immediately? I know you explained about Eaton, that it's your bit of like a risky move asset, but is there any other, maybe it could be Eaton, or maybe it could be another asset, but what would make you sell it immediately? What type of reaction would you see in the market that would make you sell this asset so quick?
Like Mariano explained, like it kind of feels like rate cuts are coming soon. I think there's 3 people that work for the Fed that like have confirmed it's coming. It's coming, but nobody knows when. The money printer and to global supply is on. So everything looks kind of bullish. I would say like even now with the things happening with Iran and Israel, right? It was not a sell-off event, even though the social media was all fear of World War III. The market did react, but it wasn't crazy. Bitcoin went down like 5 or 6% and bounced back within a week. I don't really. Sorry.
Bitcoin held well.
Yeah, exactly, and crypto is one of the most over-leveraged industries, and maybe the most over-leveraged. So I would expect a bigger reaction. What is the black swan that can make me sell? I have a hard time thinking of one. Obviously, if there's a real nuclear bomb going off somewhere, then it's sell everything and sit out. But let's hope that doesn't happen. Yeah.
Yeah, of course. Okay, so this is kind of for everyone, kind of an open discussion. What is your take at the moment? Is the edge still in crypto, or is TradFi making a comeback at the moment?
From a personally, like my spot holdings, I have been selling crypto for the last couple of months. Basically, since January, I have been spot selling. I am swing trading every day. But for me, this was the year to start selling crypto and moving it to other assets. So I've been personally looking a bit at real estate, lots of land. But stocks was definitely on my list to start adding stocks, indexes. If I want to take some time off daily trading, it'll be mostly indexes, but I will pick stocks like these ones that I mentioned today as well. So it is definitely, I think a lot of crypto people will slowly start pivoting to stocks when Bitcoin starts stopping. I don't think Bitcoin has stopped, but I think it will in the next 6 to 9 months. So where's the money going to go? It's going to go somewhere.
Very true. What about Mariano? What's your take on this?
On the in terms of the Black Swan event, sorry?
No. In terms of like, is the edge still in crypto, or is TradFi making a comeback?
That's a good question. I think this cycle has been so different from the previous one in so many ways. Particularly institutions coming in. We were in the previous cycle begging for them to come, and now we are kind of begging for them to go away. And we are kind of in the opposite. We are kind of missing where is retail, right? So if you go to Google Trends, there's nothing moving, and every time that there is a pump, the retail is absolutely sleeping, and every single move of that is significant of the price is driven by institutions. We start seeing retail selling, and then immediately we see the ETFs bringing in more cash into Bitcoin, into and all of that. So it's kind of, it feels like it's blending now, right? So Bitcoin through the exposure of MicroStrategy and other Bitcoin related stocks plus the ETFs, it's kind of becoming part of TradFi, and with it, it's bringing in all these bad habits of TradFi, all the manipulation that they do, the way they shake you off the recent move from 74 of Bitcoin into over 100 and into the recent all-time high, that didn't have any move down. It was extremely a rare kind of price action. It was like a ladder without swing lows, without clearing imbalances. I watched so many other sources of information from people I admire, and one thing that resonated a lot was TradFi is here. They're doing the same dirty tricks that they do in TradFi. So it's good in this cycle to understand a little bit of both worlds, because we are no longer kind of seeing this typical behavior. Morton probably saw these things in 2017 when we had these dips of 50, 60% in the middle of the bull market. And then suddenly, boom, 1,000% up. Now things are squashed with less volatility and more manipulation. And, and that's what we need to kind of get used to. I think they're blending. They're becoming part of the same thing. The only thing that is still the elephant in the room is what's going on with the alts, because the alts are still the domain of retail, and the wealth, the institutions are kind of looking at them, but they are not yet fully committed. We are seeing them with some interest on Ethereum. When it had the recent crash, they definitely got in, and they're still accumulating on the ETFs. But the rest of the altcoins, there's just too many. They are heavily still a domain for retail, and we need to see what's going to come out of that. Going back to the .com, there was a similar situation. There were so many companies. Every day they were coming out, new companies in the .com, and they were saying, well, I'm valuable, I'm great, I'm amazing. Oh, I improved this, I improved that. Well, we got kind of that situation at the moment with the altcoins. And eventually we need to get like a, top 10 that are the real winners. And I'm not necessarily talking about meme coins or stuff like that, but which ones are going to be the surviving ones, the ones that we remember, 10 years from now, and we say, well, that was an obvious one, but now today it's not necessarily very obvious what's going to survive. You talk about Solana, you talk about Cardano, and they are all like dogs fighting in in a cage right at the moment. No, this is better. No, that's bad. There's FUD about Solana. There's unlocks coming in. There's ADA that that doesn't have use case. Everybody's battling, showing their teeth to become that part of that top 10 in the next 10 years. It's a tough one.
I get you. Yeah. FT, what's your take on this? Is the edge still in crypto, or is TradFi making a comeback?
Yeah, I've been trading TradFi for the past 11 years. Yeah, and I think on the crypto market was really just crazy. Yeah, and just besides Morton mentioned all the stocks especially the U.S. stocks are very strong all the time. If you look at the weekly chart of the past 20 years, there's only one way: it's up. So buying U.S. stock is absolutely the right choice, I would say, for the long term. And for cryptos, I'll definitely believe Bitcoin going to make another new high for sure in the next few months, absolutely. And yeah, Bitcoin is very strong for now and for the near future, for no doubt. And for TradFi, TradFi is very momentum. It's like you guys have seen the news, what happened in the Middle East. So people are keen to trade like oil, like WTI, or gold, or all the all the equities going down. But things, yeah. So everything is going with the news. So it's very kind of short, more like a short-term period of trading. Yeah, but different because they are from different categories. So I would say, yeah. So everything is very well worth.
Amazing. So Next up, I want you guys, the professional traders, to kind of rate each other's portfolios. I know we only got a quick glimpse at them, but what would you give it on a scale of 1 to 10? I don't need an explanation, just give a number.
It depends, because we kind of build portfolios with different kind of goals.
Yeah.
In general, I'm more into the swing trading and trying to catch those sweet moves. And I will have done something more towards that area, because that resonates a lot more with me. But I kind of push myself to building that medium to long-term thing that I can just set and kind of forget. So I try to aim for that. So I will, with the approach that Morton is having, I will say for approach, I will give it an 8, because that's something that I will do. Not necessarily I share, the same insights of those particular stocks that he picked. There were a few, I think the last one that I never heard about. And Amazon, yeah, I like it. But these days I'm kind of thinking I should get some exposures to some Chinese stocks as well, and some other alternative markets, just in case, the S hits the fan. But I will give it an 8 from approach. In terms of the specific stocks, I will give more exposure to other markets and other asset classes. But again, I understand what's the thinking behind. So I will give it in an 8.
Nice. Morton?
I think Mariano was a bit too shy about himself. I think he did very well job with a diverse portfolio. Like I guess the challenge was for a long time gold. And I think if I would advise a passive investor how to invest, it would look similar to his. So I think he was a bit too modest about his own portfolio. I would rate it very good, especially for diversification. So I'll give it a 9. If I look at what stocks he picked, they were all good stocks. They were a lot of proxies to crypto. I would avoid that if I'm doing stocks myself, because if I'm doing Coinbase, MicroStrategy, Hood, I don't think he had Hood, but he did have MicroStrategy and Coinbase, which is basically crypto proxies, because if crypto goes down, they will go down as well. So if I'm buying stocks and moving outside of crypto, I would take those out. So I would say portfolio-wise, I would give it a 9. That's very diverse, very, very well thought out. Particular stock picks, I would give it a 7 or something. So it will be a 8 average as well.
Okay, fantastic. That's great. I think one final question I'd like to ask you guys is, what is the biggest mistake that new traders tend to make when they start building or when they try to build a mixed portfolio, a very diverse portfolio?
Oh, tell me about it. I mean, I'm gonna not go very far. I'm gonna refer to my early beginnings. So when I started building a portfolio, we do what everybody does. You reach out to YouTube and you start finding someone that is giving you information, and you find a good channel that is sharing lots of insights about certain stocks. But what you're not aware is that you end up finding your own bias. You find a channel that confirms, it gives you confirmation bias of precisely the thesis that you have. Like, for example, I don't know, let's say Morton is building this portfolio 10 years ago and he's a beginner. He will find a YouTube channel that's saying amazing things about Amazon, and he wouldn't get new information because YouTube gives you that, right? It confirms what you're looking for. You're going to search for Amazon and they're going to tell you, yeah, it's amazing, go and buy it. Yeah, but YouTube is going to do that to any stock that you research for. You could research about the worst stock in the world, and you're always going to find a video that is telling you that is the best, because someone is going to be in love with that stock and it's going to tell you those things. And I think one of the worst mistakes of beginners is doing precisely that. being in that bubble of the confirmation bias, buying that stock and being too heavy in a single thing, and thinking that investing is a little bit betting, that let's see what happens. And second mistake is no risk management, or not balancing properly the portfolio, or being overexposed, like Morton was saying as well, to just crypto, just thinking, well, we are in 2025, it's a topping year, and there is some upside still to be had inside crypto. But if you're not well aware of that, if this is your first cycle, you just fall in love with the feeling of going up only. Eventually that fades away and you retain your bags, and that's the end of it. So I think around those three are the worst mistakes. So I will say, if you're building a portfolio, focus on how you can diversify, how you can mitigate risks. Study a little bit of assets that are decoupled, things that are doing opposite things. So in case one goes up, the other one goes down. You want to aim for a portfolio. If you're going to hold it, if you're going to look away, you're going to go for holidays and you want to sleep, right? You don't want to be doing swing trading. I love doing swing trading even in my holidays, but not everybody can do that. Not everybody has the lifestyle to do that. So aim for a portfolio that smooths out that experience out and kind of removes a little bit that intense emotion of one side of your portfolio bleeding and the other one, doing mediocre, and then you feel like you need to do something, because then you're going to fall in the trap of selling something that was about to bounce up. So I think that's the biggest mistake.
Gotcha. Morton, what's your take on this?
I think Mariano made some very good points. I think if I'm thinking about biggest mistakes, not from any investor, but more from the crypto moving to TradFi investors, that type of people. If I think there, the biggest mistake is going to be patience. Stocks don't move as fast as crypto, and most likely with stocks, you're going to buy them spot. So 1% move on 100x is a lot more than if you're buying spot and Amazon goes up 1%. So I think the SP 500 over the last decade or last 2 decades has been going up by 20% a year or something, which is a lot if it's compounding. But if you're used to crypto, 20% a year feels really slow. So I think patience is going to be the biggest pitfall for crypto guys moving to TradFi.
Nice. Okay, great. That's perfect. Well, thank you guys. So I'm going to give everyone a bit of a background on the TradFi Fusion Cup campaign that we have at the moment. So if you want to build your portfolio like Morton and Mariano did in this little live stream, you can check out our Bybit TradFi Fusion Cup campaign, which I think launched this week. Join the leaderboard. You can trade across crypto and global markets, win prizes based on performance. You can check it out on our platform. But yeah, I think that is kind of a wrap on the first ever Bybit TradFi. I think we can call it a showdown, I guess, portfolio showdown. I just checked the vote results, and Morton, congratulations, you got the highest vote numbers from the community, but very close. It was a very close one. So it was like 482 to 420. So not off by a lot. Okay, that's perfect.
Very cool.
Great.
Well,
so yeah,
people follow that make some money, but no promises, right?
Yeah, of course. So yeah, that's a wrap. Thanks to Mariano, Morton, and FT. Everything you did today was fantastic. And remember, make sure you sign up to Bybit TradFi today, and make sure you test it out. And you can find out about our latest campaigns and even latest updates on our website and on our social media channels. And make sure you give a follow to Morton and Mariano on their own socials as well. Thank you everyone for joining this live stream, and we'll catch you next time. Take care,
Cheers.
guys.
Thank you.
All right. Was a pleasure, guys.
See you.
See you later.
Bye-bye.